Well, g'day all, Peter Clark here, and welcome to this month's market update. Okay, so the last couple of months we've spent a bit of time discussing the rising interest rates and their impact on property prices using real figures and historical data to hopefully give you a good basis for argument when you see those sensationalist headlines about the great property crash. And to save you going back and watching our reruns, I'll sum things up like this. Nationally, home values lifted by 28.6% during the pandemic, but they have now shed 2% since peaking in April. Now, whilst we've touched on investment properties recently, we've decided to take an even deeper look this month. You see, much of what we've been hearing can only be defined as doom and gloom, but the forecast for property investors is looking more promising. Not only is there now more certainty around the issues that have been holding investors back over the past few years, such as the effect of COVID-19 on immigration, the impact of changing government, moratoriums and the legislation changes. We've seen it all. But the rental rates and yields have been increasing. So according to CoreLogic, unlike changes in dwelling purchase values, rental value growth remains high across Australian dwellings. Rent values increased a further 0.9% in June, taking rents 9.5% higher over the year. But it's not just the rental yields to look at, because if you want to get a glimpse on where the property market is headed, the borrowing data is a wise starting point. You see, nationally, investor finance made up 35.8% of new mortgage lending through the month of April, up from 26.1% 12 months ago, and above the decade average of 34.8%. So according to buyers agents, residential property investors are ignoring soaring mortgage costs to snap up rental apartments and houses, and they're also prepared to ride the market down in some of the biggest falls in property prices for nearly 40 years. And why wouldn't they? Considering this and all the tax deductions available to investors, interest, depreciation, repairs, maintenance and insurance, just to name a few. You see, the outlook is looking favourable for investors. Given that interest is the largest tax deduction available for property investors, the impact of interest rate increases is not felt as harshly as it is for first homeowners and owner-occupiers. And this negative gearing is set to soar as interest rates rise, meaning Australian taxpayers could spend billions of dollars to offset private landlords' lost income in the coming years, according to the experts. Data released from the ATO shows that at its peak, negative gearing cost taxpayers more than $9 billion in the 2007 to 2008, thanks to high mortgage rates. That cost fell to $166.5 million in the years of 2019 to 20, the smallest amount in 2 decades, a fall that's no longer expected to last. So the market is hinting that we're more likely to see properties snatched up by investors. But how are these investment properties performing? Well, recent data from CoreLogic shows that more than half of all unit markets nationwide and a third of all house markets are now achieving enough rental yields to generate positive cash flow, as sharp rises in rents and falling prices offset the increase in mortgage rates. Across the combined capital cities, the gross yield has increased from a record low of 2.96% in February this year to 3.2% in July. Sydney and Melbourne unit markets posted the quickest recovery, where gross yields have increased by 0.45 percentage points to 3.4% and 0.4 percentage points to 3.8% respectively. The data shows us that rental yields are well and truly recovering now that property values can be considered flat or falling in most regions, whereas rental yields are surging higher. So with the market tip to remain on this path for a little while, and the already tight pressures on the rental market, investment properties have proven to be a wise choice. If you're wanting any further information on the property market, reach out to any of your O'Brien Real Estate team members, as they live and breathe this information and will be on hand to assist you with any of your questions. For now though, it's been a long winter, cold and wet, with a reasonably dark cloud hanging over the property market. But now that we've turned the corner into spring, let's enjoy seeing some heat back into our days along with the market. So until next time, thanks for tuning in, and we'll see you all again soon.